From Disney's bold streaming move and controversy to a crypto giant's eye-watering valuation and Alibaba's massive AI gamble, we'll break down the headlines driving the global economy. And later in the show, our deep dive. Why India is betting billions to become a chip superpower and whether it can actually pull it off. Welcome to Finance Pulse, and here are the top headlines of the day. Disney is raising the cost of its streaming platforms, including Disney Plus and Hulu, just days after a wave of backlash over its decision to suspend and later reinstate late-night host Jimmy Kimmel. The move, roughly a year after the last price hike, comes amid calls from some entertainment figures for viewers to boycott the service. Despite the controversy, Disney is banking on strong demand for its growing content library to offset subscriber churn and boost revenue in an increasingly competitive streaming market. In a bold play that could redefine the digital finance landscape, Tether, the issuer of the world's largest stablecoin, is seeking up to $20 billion in new funding. The deal, which would value the El Salvador-based firm at around $500 billion, would make it one of the most valuable private companies in the world. Tether plans to sell roughly a 3% stake through a private placement, a move seen as both a bid for growth and a signal of how mainstream the crypto sector is becoming despite ongoing regulatory scrutiny. Alibaba's stock soared more than 6% in Hong Kong trading, its biggest jump since 2021, after CEO Eddie Wu unveiled sweeping new investments in artificial intelligence. The company plans to pour billions more into AI infrastructure and product development on top of the $53 billion already committed earlier this year. The announcement lifted Alibaba's year-to-date gains to over 107% and underscores how major tech players are doubling down on AI to fuel their next wave of growth. Now to our deep dive and the story shaping the future of tech. India is investing $18 billion to become a global semiconductor hub. But can it really challenge giants like Taiwan, South Korea and the US? The global chip race took off in 2022 when US export curbs on advanced AI chips to China triggered a scramble for supply chain independence. For India, a massive electronics market with virtually no domestic chip making, it was a wake-up call. New Delhi launched its semiconductor mission to cut reliance on imports and build a full supply chain at home, from design and fabrication to testing and packaging. So far, 10 projects worth over $18 billion have been approved, and major players from Taiwan, the UK, the US and South Korea are showing interest. But experts warn that money alone won't do it. Success depends on talent, infrastructure, tax policies and trade rules, areas where India still trails. To fill the gaps, the government is boosting electronic component manufacturing and covering half the cost of new fabs, regardless of chip size. Flagship projects include an $11 billion plant in Gujarat by Tata and Taiwan's Powerchip, and a facility in Odisha focused on chips for defense and EVs. Still, challenges remain. Fabs need ultra-stable environments, pure chemical supplies and efficient logistics, all still in development. Testing and packaging could offer a quicker win, but producing cutting-edge 2nm chips remains far off. India's strength in chip design is another asset, but most of that work is outsourced and limited to validation. Stronger IP protection will be essential to attract advanced R&D. The next few years will be crucial. If India can build infrastructure, deepen its ecosystem, and move beyond subsidies, it could transform from a chip importer into a global player. But the race is on and the clock is ticking. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.